When we reflect back on 2025, it was a year to us that exceeded expectations. It exceeded our expectations with respect to equity market performance, as well as the strength in the underlying economies of the United States and other areas around the world. Investors overall will be pleased with the results that the markets have delivered. When we look ahead into 2026, the first place we have to start is with the health of the US economy. And that is because the US is the largest economy around the world and will set the tone for the rest of the global economy. The good news here is that we see a very low risk of recession. In fact, when we look across our economic indicators, they're trending more to the upside as opposed to the downside. The one caveat that we're paying attention to is the labor market, but with unemployment still at historic lows, it too is an area of optimism for us with respect to the health of the US economy going into next year. So once we've set the tone for the direction of the US economy and the global economy, which is one of continued optimism, from there we've identified 4 pillars that stand up economic growth as well as market growth for 2026. These are, first, monetary stimulus, and that is the direction of interest rates in Canada and the United States and other areas around the world. We've recently seen the Bank of Canada and the Federal Reserve cut interest rates, and we think this is a trend that is going to continue in 2026 that is supportive of the housing market in the United States and Canada, consumption, as well as profit margins. Our second theme, or second pillar, for 2026 is fiscal stimulus. Now, this is coming out of governments in the United States and Canada. The One Big Beautiful Bill is going to return a significant amount in terms of tax savings to US consumers as well as US corporations. In Canada, with the proposal for running higher deficits, this too is stimulative for the Canadian economy. So from the fiscal perspective, we see a positive for economic contribution. The third pillar that we've identified that is standing up the US and global economies is AI, and this AI revolution that we're seeing sweep the world. This isn't just in terms of the development of AI technology, but the infrastructure, capital expenditures, and research and development spending that is going on into this area. In general, out of the United States, it's equaling about 1% to 1.5% of US GDP. That's significant, and we believe not only the investment in AI, but the utilization by companies will lead to higher productivity and higher economic growth. The fourth pillar that we've identified is perhaps being underappreciated by the market, and this is the impact of the wealth effect. What we mean by this is over the last 3 years, we've seen substantial gains in the equity markets as well as positive gains in the fixed income markets. This has resulted in increased financial wealth for households in the US and Canada. And historically, what we've seen is that increase in financial wealth has led to an increase in consumption. This, we believe, will be positive for the North American economy as well as the North American equity markets. Overall, when we look back on not only the economic landscape, but also these 4 pillars, we are optimistic for continued equity market gains into 2026 that should reward investors. Notwithstanding a correction that can happen at any time for any reason, we believe equity markets will be higher 12 months from where we are today and will reward investors.